Hello, my name is Wesley Wilson. I'm an accounting graduate student at Texas A&M University of Commerce, and today I will be talking to you about fraud versus aggressive filing. Now, here's our overview. We will be discussing the differences between aggressive filing and fraud. Next, I will give you some examples of fraudulent practices. And third, I'm going to talk about some legal tips for filing your own tax return. So, aggressive filing. In the United States, the tax law is not just black and white. There's a large gray area in the middle that's left up to professional interpretation. And when you boldly interpret these gray areas for your personal gain, that's aggressive filing. Now, fraud, on the other hand, fraud is when you obtain something of value from someone else through deceit. And people here in the United States, they feel like they can get away with fraud because the IRS has actually reduced their number of IRS auditors. Here, this is the 2016 IRS Service Data Book, and what it shows is that there's a 0.7% chance of your return actually getting audited by the IRS. So let's talk about this difference just a little bit more. Let's say, for example, you're a CPA, you have a home office, and you need to get 2 chairs for your clients to come and sit in when they come in to visit you. You could easily go out and buy $50 chairs for your office. But you're an accounting professional, you want to have some nice chairs, so you go out and you spend $1,000 on 2 chairs. Now, that's kind of aggressive, but you can legally do that. You can claim that as a business expense because you're a professional, other professionals in the field have similar chairs, and that's what you can do. Now, fraud is when you say that $1,000 was actually $10,000. That's fraud. Now, some more fraudulent practices are inflated income. Now, Toshiba in 2015, they actually went through a huge scandal because the upper management was telling the lower management, you guys need to show an increase in profits and decrease expenses. This was in the 2008 economic downturn when all this was happening. And the lower management, they couldn't find a way to increase profits, so they actually started fudging the accounting numbers. Now, this led to a huge scandal later on, and the CEO of Toshiba actually quit. Some other ways that people are defrauding the government are the misuse of trusts. So, trusts are financial entities, and some of the trusts that people use to defraud the government are business trusts, there's equipment trusts, there's a family resident trust, and there's charitable trusts. Let's talk about equipment trusts today. So, equipment trust is when you have your own business and you buy some equipment for that business, but then you actually go and you give that equipment as an asset into the equipment trust. And so the trust actually leases that equipment back to you at a heavily reduced rate, overall decreasing your business expenses. Now, some other ways that people defraud the government are offshore accounts. Now, offshore accounts in themselves are perfectly legal. Let's say I had a business in Canada and I travel back and forth. It makes sense for me to have business accounts in Canada. But for my United States tax return, I need to list those accounts. If I don't, that's fraud. Now, another way people defraud the government is padding tax deductions. So this is a court case, Perry Payne versus Commissioner, where he actually said that his charitable deductions were $83,000 one year. Now, the IRS obviously audited him, and he's now serving jail time. Now, this little cute baby right here represents the child tax credit. So when people claim children that are not theirs to receive the child tax credit, that is fraud. So now I'm going to give you some legal tips when filing your own tax returns. So the first tip I can give you is claim business and charitable auto miles. Now this diagram right here is actually from the IRS publication 463. This is figure B. You can go and look it up online, and this shows you what auto miles you can actually claim. The next thing that you can do is remember that you can deduct educational expenses. So let's say you're a professional painter and you want to go back to school to learn more about painting. So your cost of classes, your supplies, all that stuff is a deduction. Now for your home office, we already talked about this just a little bit. So those chairs would be deductible, that furniture can be deductible, and even things like the phone bill can be deductible. What you need to make sure of is that this office space is solely being used as an office space. It can't be like your living room that you also have friends over to watch the football game on Sunday. Now, when we want to plan for the future, we want to put our money in something called a Roth IRA. Now, Roth IRA are pre-tax dollars go into it. So what that means is before you put your hard-earned money into the Roth IRA, that money is actually taxed before. So all the money that's actually in the Roth IRA can grow over time, and when you pull it out at the very end, it's not taxed. In conclusion, the best thing that you can do for yourself is find a tax preparer that's in the middle of the road. And what that means is someone who is not too far on the government side that's not going to find you those tax credits that you can get and those deductions that you can get. But on the other side, you don't want someone who's too aggressive and could possibly lead you down a fraudulent road. Thank you so much for listening. Again, my name is Wesley Wilson. Thank you.